Buddy, this is Osprey from mychartcoach.com, and in this video, we're going to take a look at the top stocks from today. These are some of the biggest winners, and the biggest winner of them all that we had was KODK. That's Eastman Kodak. Yes, a blast from the past is back. For one simple thing, they announced an initial coin offering. That's right. What can you do to get the share price running? Have blockchain or cryptocurrency in the headlines, and it's off to the races. So yeah, nobody wanted this. You can see it was a total piece of junk for an extended period of time. Look how there was absolutely zero volume leading into today, and then finally today there was this explosion in volume on the news. As you can see, it broke out above major key resistance levels. It broke above the green line, which is it started off first below the middle Bollinger Band. So it got above the middle Bollinger Band, busted through the upper Bollinger Band, broke through the 50-day simple moving average, the green line, and then there's this gap over here from November, and it came up and it filled the gap, and when it filled the gap, it hit this 100-day simple moving average at 549, and so it was finding some intraday resistance at that level, but then it busted through and it ended up breaking through this red descending resistance line, and all the way, there was this 675 support level from back here, just breaking through all the resistance, and then finally it hit the 200-day simple moving average at 762. Okay, and so that was the level that it found resistance before the close, and that's where the bears attacked. So you can see there's a little upper wick there. It did close more down here at 680, I believe was the close. This is changed because of the after hours trading, but actually right now in after hours trading it broke out higher. When I started to make this, it was up here around 825, and now it's pushing $9. So so that was something that we discussed in the chat, that it could possibly get moving. After hours, there was a lot of shares being dumped at the end of the day, and then after hours, the volume lightened up, and the bulls took over, and they were able to drive it higher. And so now it's looking like a gap up open situation for tomorrow. And so the next key level, you can barely see it. It's right up here. It's this blue line that's starting to pop out on the chart at 995. That is the 300-day simple moving average, and it's the next key level to break. If it goes up there and it hits that at that $10 zone and it fails to break and it pulls below that 300-day simple moving average, that will signal that a temporary top more than likely. But if it busts above $10 and you see it trading above that level tomorrow, and it can stay above and turn the level into support, then it could keep breaking out higher. So keep an eye on 10. That's going to be the big level. If for some reason it pulls back and it fails to get above 762, the 200-day simple moving average, notice that today's candle is well above the upper Bollinger Band. The upper Bollinger Band is way down here at 521, near the 100-day simple moving average at 549. So if it fails to get above 762, look for a pullback all the way down to 549, 550 to back into the bands to test that 100-day simple moving average. So huge move after hours. It was up over 100% today, but check out the options action. As you can see here with the calls, we're looking at a 4,700% gain for the February 16th $5 calls. As you can see here, they started the day at 5 cents, and they're up $2.35 on the day. Now there's even more movement after hours, so these should be up higher tomorrow if there is a gap up open. We were looking at the puts there at the 200-day simple moving average, but now that it's breaking above, keep an eye on puts when it hits that 300-day simple moving average. If that turns into resistance, that could be a place for a mini bear right there. Look at KODK on the 15-minute chart. As you can see here, it broke out here and was riding EMA4 support higher the entire day. Okay, so since EMA4 support was holding the entire day, there was never a sell signal throughout the day. As long as that level is holding, the signal is to keep riding, unless you're locking in the spike and then the candles working back in. If you're locking in gains along the way, there's no problem with that. I mean, everybody's got to make money, right? That's what it's all about. But if you're looking to ride maximize your gains, if EMA4 is holding, it's telling you the chart's super strong and that you can keep riding. Now this is skewed because of the after hours. It was down here at 680 on the close, and it was just below EMA4. So what it needs to do is get the high close for today on this chart was 740, and so you want to see it above 740 tomorrow. That'll signal it wants to push higher, and then a drop down below that middle Bollinger Band, all the way down at 507, would be a signal that the uptrend has been broken. So keep an eye on EMA4. That's going to be the big level to hold tomorrow. Okay, let's look at PTIE, another big gainer. This was up 100% at the close, and as you can see here, it was up much higher. It hit well above $12. What was the high? The high today was 1280. There was a long upper wick did form on today's candle. As you can see here, the candle did form well above the upper Bollinger Band, closed well above the upper Bollinger Band. So down here, if the candles do work their way back into the bands, you have EMA4 at 618 is the next support level. There is an unfilled gap between high of day yesterday and low of day today. So there's a space in the chart. If it ever did drop down to 450, that would fill the gap. When a stock is breaking out like this and pushing higher, and you see a long upper wick form like this, that's a signal of profit taking, possibly dilution. And it's also, when it closes well above the upper Bollinger Band like this, it's at risk of the candles working back into the bands. What you want to do is look at at other time frames, and if you look at the 15-minute chart here, you can see that this did break down into the close. Notice that it failed to make, so you have the bear cross here on ADX, the green line crossed the black line to the downside. We wanted to see RSI and FASTO stay above 80. Notice how they both broke below. So that was a signal that was cooling down. The green line broke below the black line. That was a signal that was cooling down. It had formed this descending triangle pattern, and then it broke above the ascending resistance line, or descending resistance line here at 1 o'clock, and that was a signal that it could break out higher, but it had to break above high close horizontal resistance there at $12. It failed to do that on this candle, and that started the downtrend. And so notice how the previous descending resistance line turned into support, but the final candle broke back below, and now it's back below the previous descending resistance line. It's riding EMA's 4 and 8 resistance lower below the middle Bollinger Band. So this is all signaling that it was a risk to hold overnight, but the candles could pull back lower. You could see a drop down here to the 50 simple moving average at 752, and it looks like there is an unfilled gap here on the 15-minute chart, which you don't see often. So a drop down to $8 would fill that gap. So you could possibly see that 50 simple moving average tested before it pushes higher. So keep an eye on that. If it drops below the 50 simple moving average on the 15-minute chart, then it's really broken. Right now, it was already a risk to hold because the 15-minute chart was bearish. Okay, let's look at the NSPR. Okay, so yeah, congrats everybody. It did close up 40% today. So yeah, this was a play from Mars from yesterday, and so it turned out to be a really good swing trade. Ran hard last night after hours. As you can see here, you've got RSI at 70, FASTO at 80. There was that bull cross on ADX, and so basically yesterday, when it made the big move on the giant volume, this is the chart. These annotations are from yesterday, and so we were looking for, first we wanted to see a break above this key, a high close here on December 4th. It broke above that level, and then it was the closing price here on the 29th, and it broke above that level as well, and then it was the open here on the 30th, and so it closed just above that level, and then after hours it was pushing hard, and as you can see, there was a big gap up open. Notice how today's open was very close to the close. I mean, I would call this a doji, okay? And so in my mind, this looks like a doji, and so yeah, it signals danger that there could be a pullback. If there is a pullback, then what you would look for is for that 50-day simple moving average at 26 to hold, because this candle's floating well above the upper Bollinger Band down here at 21. If you see it drop below 26, then it could drop all the way down to 21 and fill that gap. It could go all the way to 21, hold EMA 4, and still be a really bullish chart. Still a good chart with the uptrend, but it has to get above the 50-day simple moving average, which is the green line, and the 100-day simple moving average at 32 to head higher. If it fails to get above both those levels, that's going to signal consolidation. If you see it get above 22, then the next big levels are going to be this gap over here at the end of November, and so 34 and 36 will be the two levels to break. If it get above 36, then it's the 200-day simple moving average at 45. So yeah, notice the big volume behind the move. I wasn't sure, but when you have a white candle and an uptrend followed by a doji, it does form a bearish doji star reversal pattern. So yeah, keep that in mind. Okay, yeah, let's look at NSPR 15-minute chart. And so yeah, if you look here, it formed a symmetrical triangle pattern intraday. So this is the a 3-day 15-minute chart, and so yeah, it had this pattern where it was forming descending resistance here. It started riding this red line, and then it broke above here on what time is that? Let's see here. There was a break above right here at 130, and so that was signaling upside potential, and then it ran up here to 31, and so now that's the big level to break. It needs to close above 31. If it can close above 31, then it can keep pushing higher. The 15-minute chart is still intact. Okay, so even though it formed the doji on the daily chart, it's still in play here, holding that middle Bollinger Band, but it's signaling to be careful. If it drops below 27, then it could drop lower. Notice the lower wick on the last candle of the day bounced off the previous descending resistance line off of 25. So the downside risk is it breaks that middle Bollinger Band at 27, and comes down to 25, and then you have the gap over here. And so it could possibly go down to that 50 simple moving average at 21 and fill the gap. When the middle Bollinger Band breaks for stocks that are in an uptrend, what happens when they're pushing hard is you get it lined up with the 300, 200, 150, and then the middle Bollinger Band, which is the 20, lined up in a row. So they're perfectly lined up. When the 20 breaks, the 50 is right below, and that depends on how big that space is. That's a big drop between 27 and 21. You have to calculate on whether or not you want to hold for that kind of drop. If it came down there and filled that gap, that could be a catalyst for a bounce and for it to push higher. If it gets above 31, that'll be a signal it wants to keep heading higher. If it drops below 21, you could see it come down here and test that 100 simple moving average at 17. So another one of the runners was INPX, and so this formed, the dreaded black candle. This is not what anybody that is a bull wants to see. It's a great chart if you're a bear. So you have the RSI at 53, so it's heating up, but notice it has a real hard time, staying above 50. What happened here is the bears attacked the gap up open. Notice up here is the open up here at 42, and the share price, ran up to 46, but then the bears were able to drive it below the open. That formed the black candle, and it got it all the way down to the key level, and it broke below the 50 and the 100 simple moving averages, the 50 and 100-day simple moving averages. That was signaling downside risk. It came back into this channel. It had been in a channel here, yeah, it dropped back into the channel, which you don't want to see if you're a bull, because this was the descending resistance. So now it's back in the previous trend. What you want to see is it break above and then turn this red descending resistance line into support, and then it can push higher and make a new trend. But it got sucked right back into the previous downtrend, and the reason why more than likely is the gap. You got to be careful when you trade penny stocks with these gaps. It's not like Facebook, Apple, some of those big big board stocks. They can have gaps and keep pushing higher, but most of these penny stocks will fill gaps eventually. If not right away, they will later, and so just keep that in mind. And so we really don't like to see gaps on the chart. It makes the chart unhealthy. It gives the market makers a reason to pull it back. It gives the bears a reason to attack. It gives everyone a target. Okay, so just keep that in mind. You got to know how to play the game. And one of the ways to play and stay safe is avoid the black candle. You just got to, if you're long, you do not want to be holding. This is just pain and suffering. And the lower it gets, the closer you're going to get to capitulation. And then more than likely, you're going to dump down here at 24 when the gap fills. And then they're going to bounce. And then you're going to be like, oh my God, I sold at the bottom. And then now it's I'm on the wrong side every time. So don't let that happen when you start seeing that black candle form or early in the day. Exit quickly. Hopefully you're exiting with profits. And then when it comes down and fills the gap, a gap fill is a climax event, and that's a signal to load. And many times you'll get a nice bounce. So right now we're looking for a drop down to 24, that 25 middle Bollinger Band support level, a bounce off that level, and then we'll see if an uptrend can get going. It's never a good sign when you get a big black candle like that. If you look here at the INPX 15-minute chart, you'll see that it formed a symmetrical triangle intraday, that descending resistance line. It dropped below the middle Bollinger Band here, and then that was signaling more downside risk. Notice how it failed to get above the 39 high close, and so whenever you can draw a descending resistance line and it gets going, that's a signal that the bears are attacking. This did have the ascending support, so it formed a symmetrical triangle pattern. It could have gone either way here. It could have broke out higher, but it happened to break down. And so when you see a drop below the middle Bollinger Band and below support, you look for, that's a signal to exit if you are a bull. And so, yeah, so if you look down here, it's hitting the 50 simple moving average, the green line. It needs to hold that level. That's currently basically at 29. If it fails to hold that level, then you can see a drop down here to 26 and 20 and 24. So those levels would be on deck if, and notice how the 24 is the bottom of the gap, and that is lined up with the 200 and 300 simple moving averages on this chart. So it's likely to come down and hit those levels. And on a 15-minute chart, when they hit the bottom moving averages, many times that's a good level to load. Many times you can get a technical bounce off that level, so keep that in mind. Okay, let's look at ENSV. Okay, so this was up 32% today. It was breaking out. You could see it's got a long upper wick on today's candle from 120, and then so that does show some dilution, some profit taking. There is a gap below. Notice the gap between high of day yesterday and low of day today. So if it pulled back down to 76, that would fill the gap. It's at $1 now. You really want to see it stay above $1. Today's candle is above the upper Bollinger Band, and it is on a 5-day run with a big volume spike today. So you could see the candles work back into the bands and possibly test that EMA 8 support level. If you look here at the ENSV weekly chart, this will show you why it likely formed that long upper wick today. You can see it's hitting the blue and red lines in this chart. That's the 200 and 300 week moving averages. It has to close, break above those levels and close above for the week to head higher. Keep in mind this week's candle will not set until the closing bell on Friday. But if it fails to break above that level, that could signal temporary resistance. So that 117 level is the big level to break. Notice how this week's candle is pushing through that upper Bollinger Band here, down here at 86. And so you could see the candles work back into the bands to test that EMA 4 at 81 support level. So it has a really good uptrend going. It just has to bust through 117 resistance. And then if you look here at the 15-minute chart, you can see volume picked up today. Notice how all the volume, the big volume happened early in the day. It ran to 120 and it formed that long upper wick, that big pullback. The promising thing is that it closed above the closing price on the opening candle. So it was able to make higher highs through the day. So that was actually positive. Okay, so that's a good thing if you're a bull. It's much better than it failing to make new highs. As you can see here, it has this like rising wedge type pattern here. And so, the candles were coming to a flex point, and so it has to bust above this 101 level, the high close level, and that'll signal it wants to head higher. Then you can see it run back up to 120. If it fails to bust above that 101 level, and then it drops below 93, which is the middle Bollinger Band, that's when you can see this 84 down here at the 50 simple moving average tested on the 15-minute chart. Okay, so take a look at AMRS. It had a nice breakout today. It closed up 12%, so it made a really bullish move. It had been turning the 200-day simple moving average into support. That's the red line, currently at 303. Today it pushed higher. Notice how it's hitting the support from back here in May. If it can bust through this May support zone, then it could head up here to the bottom of the gap. There's a gap from May. The top of the gap's up here at 775. The bottom of the gap's right here around 575. So if it can bust through this current resistance zone, it could run up to 575 in the bottom of the gap, and just above that is the 300-day simple moving average at 607. So those are the eventual targets if this uptrend can continue. It has a very nice strong uptrend. You want to see that 200-day simple moving average at 403 hold. Notice there's a really big volume spike today, so it's a really bullish move. We can see if it can get the juice to push up there to that 575 level. Okay, let's look at MCEP. This is another stock that's been making a really strong move. It's on a multi-day run, another 11% up today. As you can see, it had a big gap up open today. The big volume spike a couple days ago, what was your clue? Okay, when that big volume spike happened last week, that was and it busted above that 200-day simple moving average. That was your big clue that money had entered in the trade. And notice it's been heading higher ever since. Now today it pushed above that 300-day simple moving average at 183. That's the level you want to see hold. If it can hold 183, stay above that blue line, and then get above this $2 resistance level, it could keep pushing higher and filling this jar. You know, it looks like it's just heading back to these previous levels from earlier in the trading year. You know, this is what we call filling the jar. It came down, you know, it made multiple bottoms down here, and then now it's pushing higher and breaking out. The big key is going to be staying above that 300-day simple moving average. Now, if you see it drop below that level, that's going to signal consolidation. It's getting very parabolic right now, and it's you know, riding EMA4 at 174 support higher. If you see it close below 174, that's going to be your clue that it's cooling down. That and a close below the 300-day simple moving average. That's when you could see some consolidation. I mean, you have MACD lines are getting pretty perpendicular. You know, they're getting pretty vertical here. I mean, they're not completely perpendicular, but this is a really unsustainable trajectory. You know, it's unlikely that it can keep pushing at this same rate for an extended period of time. And if you look at the weekly chart, you can see why, or one of the reasons, or a tough level to break at least, is this gold line here. It's hitting the 100-week moving average, and that's a big level to break. It had a gap up open this week above that the green line, which is the 50-week moving average at 163, and so now it has to get above this 100-week moving average at 204, and if it can close above that level, that would be huge. So a weekly close above 204 would be the signal that this uptrend is intact and still pushing strong. So that's what the bulls are looking for. And then if it fails to close above the 100-week moving average, it could consolidate, and then it might retest that 50-week moving average at 163. You want to see the 50-week moving average hold now that it's above that level. So yeah, so this is a really good start to this uptrend here, and it looks like it could keep pushing higher. The next big level would be that the top of this descending resistance line around 250, and then you have the high close up here around 375. You know, above, if you get above that 100-week moving average and turn it into support, you know, the 200-week moving average is way up here at 570. Once again, the big volume, you know, is a clue that they were loading for a potential rally higher. Okay, let's look at ITUS. Okay, yeah, it closed up 18% today. I did form a long upper wick on today's candle. It formed one yesterday as well. When that happens, you know, and the stock is up on the day and you have a big volume spike, you know, check out accumulation distribution and shaken money flow. I should have shown that for the other stocks as well. You can see how they spiked down today. You know, that's not what you want to see when a stock is up 18-20% on a day on a big volume spike. It's a signal that they were selling shares. And so when a company is dumping shares, it makes it hard for the share price to keep pushing higher. Now, right now, it could keep this pattern up. It's getting frothy here. You know, you have multiple gaps. You have 1, 2, 3 gaps here with the long upper wicks. Today's candle did form above the upper Bollinger Band at 314. If the candles do work back into the bands, you want to see that EMA4 at 304 hold. That 300-week moving average is at 281, and you want to see that turn into support now. If you look here at the 15-minute chart, you can see it made a top early in the day here at 10 o'clock, and then it failed to get back above that level, and then it formed a down trending channel here. So you can see that it keeps making lower lows and lower highs, and so currently it's below the middle Bollinger Band. It broke the middle Bollinger Band at 215, so that was a red flag, and then it came down here. It bounced off of that 50 simple moving average support zone, and it got back up. Now it's right back at that middle Bollinger Band at 356, so it needs to close above that level to head higher. If it fails to break that level, you can see it come back down and test that 50-week moving average. If that 50-week moving average at 333 or 331 support level breaks, that's when you could see a big drop down here to the 100 simple moving average at 291. To the upside, it needs to make a new high close. So if it can close above this 887 level, that's going to be your signal that it wants to head higher. Okay, let's look at HMNY. Okay, so as you can see here, it's trading higher in after-hours trading, and it has the middle Bollinger Band. It's trying to turn into support, so it's trying to get a new uptrend going. The middle Bollinger Band is also the 20-day simple moving average. It came down here and it bounced off of the 300-day simple moving average at 540. As long as it stays above the middle Bollinger Band at 690, it's still in play. Now it's working on filling a gap between low of day on this candle and high of day on this candle. So the top of this candle and the bottom of this candle, and so what it could do here possibly is run up here to the or keep heading towards the top of the gap here, which would be the upper Bollinger Band at 907, and then you have the 50 and 100-day simple moving averages both converging around 970, and then you have the top of the gap there right around $10. So to make it easy, you could see this head to $10 if it can keep that middle, hold on to that middle Bollinger Band and not close below. So that's what we'll be looking for with HMNY as a gap fill on a run to $10. Okay, let's look at GLBS. So yeah, keep an eye on this stock. These marine transportation stocks are super risky, and yeah, whenever they make a little move, we'll put out an alert. So yeah, keep an eye on it. It bounced off of the 50-day simple moving average. Notice how it's been holding that level. Okay, so that's been the big load level. Every time it hits that level, if you loaded off of that level, maybe you had to wait for a while here. It's paid off every time. So as long as that's the pattern, that's the load zone. Now it's hitting the sell zone, which is the 200-day simple moving average. Notice how when that gets hit, it's unable to break. And so what needs to happen now, it needs to close above that level. So if you see GLBS close above 141, it close above that 200-day simple moving average, that should be the signal that it's heating up and it could possibly head higher. It would have to stay above that level to be a good play. So if it fails to get above the 200-day simple moving average, it's not ready to go. This is one of those stocks that it's probably just better to wait for that break above resistance than trying to get in early. If you get in early, you could get stuck holding the bag for a little while it's still setting up. Okay, look at LINU. It closed up 11% today. So this stock's been a little frustrating. It had this pullback, it bounced, but notice the bounce on this last bounce formed that long upper wick. So that was a signal that they were, there's profit taking. It wasn't quite ready to go with that. Now today it has a stronger bounce. It has a better candle that formed today. It's back above EMA's 4, 8, and 13. It's holding all. You've got the 100, the 20, the 50, the 300, and the 200-day simple moving averages all lined up right there. And then you have EMA's 4, 8, and 13 exponential moving averages all lined up there. So it's currently above all the moving averages. Okay, so it just needs to stay above 189. If it can stay above that level, then it could get moving higher. And what you want to see is a break above the 251, which is the upper Bollinger Band. Notice it's hitting the closing price here on the 5th. So it needs to close above that level. Then you have 251, and then you have the big level is up here at the closing price on the 27th there. So at 310, just above 310. Okay, so take a look at TNDM for the last stock on this video, the last chart for this video. And so yeah, this made the list just because I saw it was up in after-hours trading. So we'll take a look at the chart and see what's going on here. It's at 350 after hours. I didn't check to see why. It's got it's above the 50-day simple moving average. It's trying to start a new uptrend here. It's above the 50-day simple moving average. Notice yesterday it closed above the green line. That was the bull signal. It hadn't closed above the 50-day simple moving average since way back here in October, when it was actually, trying to get an uptrend going. So that yesterday was the best that it had looked since October. And then, today it formed a red candle, which probably shook a lot of people out. And then now it's up and after hours trading. Not sure the whole deal. But on the chart, technically, it's hitting. If it's at 350, then it's right here at the bottom of the gap level. There's a gap over here in October between low of day on this candle and the high of day on this candle. And so if it can break above this 350 resistance zone, it could run to the top of the gap and then to the 100-day simple moving average at 423. Those would be the targets on a break above 350. Now keep in mind, a gap fill many times is a climax event, and it would have to break above the top of the gap and stay above that level to head higher and push to that 200-day simple moving average at 627. Fail to stay above the top of the gap and the 100-day simple moving average would be signaling a temporary top. Okay, thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis, please come check out our chat. I'll post the link below the YouTube video. Okay, thank you.